Sir John Templeton was one of the greatest investors of the 20th century. He created the Templeton Growth Fund, which averaged growth over 15% per year for 38 years. He pioneered offshore investing for American investors in the 1960s. His investment rules are as relevant today as ever. Hi, Uncle Kevin here. Let's talk about Sir John Templeton's 16 rules for investment success. Please subscribe and click that notification bell to support my channel. Rule number 1. Invest for maximum total real return. You should aim to maximize your total return as an investor over the long term. Rule number 2. Invest, don't trade or speculate. Too many people thought they are investors, when in fact they are traders and speculators, getting the adrenaline from day trading, dreaming of getting rich quick. Real investors understand it is a long game. Rule number 3. Remain flexible and open-minded about types of investment. Things change. New inventions change the way people live or work. We need to be aware of the environment and assess opportunities. John Templeton visited Japan and saw the economic growth in the 1960s, and he invested investors' money in Japan. IBM and Kodak were great companies 30 or 40 years ago. Today, IBM is no longer the tech giant it once was, and Kodak, once a great analog camera company, filed for bankruptcy in 2012 as it failed to catch on the digital camera trend. Bitcoin only started in 2009. Rule number 4. Buy low. When combined with other rules, buying low is a sure way of making money, as you buy something at a discount. Rule number 5. When buying stocks, search for bargains among quality stocks. Focus on quality companies. When bad news or external shocks cause their share prices to fall substantially, it often presents an excellent buying opportunity. Think of the market crash in March 2020 due to COVID. It was an excellent buying opportunity. Rule number 6. Buy value, not market trends or the economic outlook. Market trends and economic outlook are difficult to predict. Most market participants and economists' forecasts turn out to be wrong. John Templeton was a student of the father of value investing, Benjamin Graham. He believes in buying low, selling high. Number 7. Diversify in stocks and bonds. As in much else, there is safety in numbers. This is probably the free lunch you can have. Don't just invest in 1 or 2 stocks. You might get lucky and make lots of money, but it's a very risky strategy. When you diversify across stocks, sectors, countries, and asset classes, even if one company blows up and its value goes to 0, it will only impact you by a small percentage. Rule number 8. Do your homework or hire someone smart to help you. Many people invest without doing any homework. They rely on news and hot tips. A friend mentions a stock at a buy. Not doing homework means you will have little or no understanding of the company you invest in. It is speculation. If you are not prepared to do the homework yourself, hire someone to do it for you. For most retail investors, it means investing in unit trusts managed by professional fund managers. Rule number 9. Aggressively monitor your investments. You need to monitor the stocks, bonds, and asset classes, whether they have risen or fallen. the reasons and when to sell or buy more. It requires constant monitoring. Expect to react to change. No bull market is permanent, and no bear market is permanent. And there are no stocks that you can just buy and forget. The pace of change is just too great. Being relaxed doesn't mean being complacent. Rule number 10. Don't panic. Human instincts and emotions make us to react to market movements with greed and fear. When we see markets and stocks falling, we are likely to panic as we fear if we don't sell, we might suffer greater losses when the market falls further. But we need to handle our emotions and learn not to panic. If we have done our homework and we believe the reasons for investing in a stock still hold, we should hold on to the stock. And probably the falling share price gives us the opportunity to buy low. Remember rule number 4. Number 11. Learn from your mistakes so that you can get better each time. We all make mistakes all the time. Learn where you have gone wrong. Was your homework thorough? Were you too optimistic or too pessimistic about the prospects? Did you pay too much for the stock? Did you sell too soon? How can you improve your investment system and process? Document your lessons. Rule number 12. Begin with a prayer, so you may have a clear head to consider and analyze your investments. Rule number 13. Outperforming the market is the difficult task. This coincides with another great investor, Warren Buffett. This is powerful. Many investors, including me, think we are clever and can beat the market. But John Templeton teaches us to be humble, or the market will humble us. Rule number 14. An investor who has all the answers doesn't even understand all the questions. Another powerful rule. We as investors continue to be learners. We need to be curious, ask the right questions, then we can find the right answers. Be diligent, do the homework. Rule number 15. There is no free lunch. Do not marry to a stock. Do not invest just because you feel good about the company. Never invest in an initial public offering IPO to save the commission. That commission is already built into the price of the stock. Never invest solely on a tip. You will be surprised how many investors, people who are well educated and successful, do exactly this. Unfortunately, there is something psychologically compelling about a tip, isn't it? Its very nature suggests inside information, a way to turn a fast profit. Number 16. Do not be fearful or negative too often. The biggest risk is not to take risk. We need to take risks to generate long-term returns, to create real wealth. Sticking money in the bank, fearing that the market will go down, is not a good long-term strategy. Over the long term, equities have proven to provide investors with the best returns despite all the ups and downs and crashes. What is the one thing you have learned from Sir John Templeton's 16 Rules for Investment Success? Leave your comment below.
Thanks for watching. Thumbs up if you like this episode and share it with your friends.